This recording is for April 29th, 2012. Well, Friday, there was one trade that I saw, and I actually took. However, I ended up scratching the trade. Entered right here on this bar when I saw price turning up, and we had a confluence of a demand line and right at support here. However, after about 45 minutes, I ended up just getting out of the trade for I think it was for a flat, or maybe it was a tick winner. And of course, about 5 minutes later, took off. I probably would have exited here. We have a perfect confluence of a trend channel, as well as we were right at resistance. So, and being Friday, I doubt I would have held on to it too long. Based on my entry, it probably would have been about 4 points I would have gotten out of that trade. And other than that, there was nothing really to speak about. I guess you could have shorted this up thrust, though I don't think I would have touched that one, or I didn't touch that one, just because the trend was such a strong trend, and I didn't see enough weakness in the background to fade this up move. So I didn't take that. I guess if you're real aggressive, there was a support level right here, and we were oversold in the trend channel. This could have been another place I could have gotten long, but I'm kind of played close to the vest on a Friday, so I don't think I would have, taken that one, or I didn't take that one either. Waited for this. That was the only trade I really saw. Just goes to show, though, you gotta stick your trades out. Sometimes on Fridays I talk myself out of trades a lot because it's so quiet, and sometimes the market just doesn't do anything at all. And so I kind of talked myself out of that trade, which was a mistake on my part. There was no reason really to get out of that one. Well, the fact that we had some ease of movement through this resistance was a pretty good sign. Volume is adequate. It was decent. Nothing extremely high or extremely low, so that's a good sign. Maybe if we do pull back, I wouldn't be surprised if we come down and test this level or dip slightly below it. Friday was quiet. It was a narrower range, so wouldn't be surprised if we pause for a little bit. However, I really think we're in a bull mode right now. A lot of the guys that I glance at as well are saying that this is definitely looking like more of a this was probably more of a pullback. Looks like it could be a fourth wave correction. I don't know if any of you like Elliott wave, but this could be a 1, a 2, a 3, and usually if the first one is simple, the second one will be a little more complex on the pullback, and that's what this looks like. It looked like it was a fairly complex pullback. So if that's a fourth wave, that means we got another fifth wave, impulsive wave to go up. I've dabbled a little bit in Elliott wave, and I don't really rely on it too heavily, but sometimes it's pretty obvious. When it is, it gives you an idea that there could be some potential for a pretty big move. So I think that would be the case here. Another trader that I've taken some courses from is Justine from the Profittunity group. I know a lot of people that have traded, a few people that have traded that style and worked out well for them. I've used it in the past and had some fairly decent success with it. Anyways, they have a way of using or looking at Elliott wave that's a little bit more objective. And one thing is they use this thing. It's called the AO oscillator, and generally impulsive waves, you get a higher high on the oscillator, which we got from here. It made a higher high, and that's most likely a third wave, impulsive wave when you see that. When it dips below 0, that means you're in a fourth wave correction, and when it goes back above it, you've finished and you're probably going to move higher. Now there's a couple rules based on how many bars can be in the wave, so we may have to move the time frame larger or smaller depending on that. But I just kind of glance at it. I don't give too much weight to it. But in this instance, I look like a pretty obvious looking fourth wave correction on this particular chart. So if you look at the weekly chart, David Weiss pointed out that this bar is the largest range bar we've had quite a while. So it's interesting to note. It's seeing that's a very bullish bar, and it closed very strong when lend to to the probably higher prices. Two, it looks like a pullback in a general uptrend. This oscillator I use, the 310, Gary Dayton has a good webinar on this particular oscillator. It's bullish, and it's given a good indication this is probably just a pullback in a bull trend. So, I really think that we could have quite a bit farther to go in this trend if we can take out these highs with some ease of upward movement. We'll have to look at each bar individually to determine exactly or to assess the market as we move along, but it looks pretty good. For tomorrow, well, it was a quiet day. However, we're still inside this trend channel, and no real signs of weakness. As you can see on the Weiss wave, we don't really have any big supply coming in, and the waves to the upside are all mostly demand driven. So you can see a lot more up volume in the up waves and the down waves. We see a little bit of shrinking of volume on the last few up waves compared to this. And there is some shortening of the thrust. The move from here to there is shorter than the move from here to there, and so forth. I indicate shortening of the thrust on my chart. I annotate it with this curved line, and it's what I use to kind of remind myself of that. So, obviously we can pull back to some support, and I think this would be a good area to test right here around 1390 and a quarter. But all the basic momentum indicators saying it's pretty strong momentum. No reason we can't continue higher. So we'll just have to see what we do intraday. If we spring off the lows of Friday's intraday trading, or we go above the highs, we can go up. Also, I wouldn't be too frightened to take a counter trend trade. If we reject the highs of Friday, I don't see why we can't pull back a little bit. So, it's definitely bullish. So any type of major sell-off, I would probably, if I find any climactic selling intraday, I think that'd be a great time to start looking for some buys, being a little more aggressive on the buy side. Anyways, that's what I see for tomorrow, and it's Monday, so of course it's going to be a little quiet. However, we do have a decent amount of economic news coming out. I show three things. I use econoday.com, and they do a good job of, they give a red star for very market influential news, and yellow for semi, and then they don't mark anything else unless if any star if it really has much of an impact. So there's 2 yellow and 1 red, so it's pretty good. Usually if you got a red and a few yellows, that means there's going to be some good news. We do have employment at the end of the week too, which things might get quiet on Thursday late in the day, so we can anticipate a quiet close on Thursday and maybe an active morning on Friday. I find Fed days on Fridays tend to die off right after the first couple hours. They're hardly worth trading a lot of the time, so something to keep in mind. But tomorrow we've got personal income before the market opens. Then after the market, about 15 minutes after it opens, we've got Chicago PMI and Dallas Fed manufacturing survey, which is around 10:30 Eastern. So, who knows? I think we might get a little more activity than normal this Friday, this Monday. Rest of the week actually looks pretty full for economic data, except for maybe Wednesday. No, Wednesday actually looks good too. It's a pretty full week, so hopefully you have some good trading this week.